Richard Harris joining us this morning. He's Chief Executive at Port Shelter Investment Management. Richard, very good morning to you and great to have you on.
Thank you.
Let's just talk about what you made of these tariff letters that came out over the weekend on Canada, Mexico, as well as the European Union.
Well, that last clip showed convincingly that Trump is obviously the second best economist in the United States, who always gets it right and is never too late. Although you do have to wonder whether he's getting it right with these tariff letters. You know, the way they were written was just unbelievably patronizing, if you look at it. And the first implication that anybody is going to make, whether the leader of a country or just a casual observer, is that your first impression is to say, get lost. Now, of course, then realpolitik breaks in and you have to say, well, okay, you know, what's the possible damage that could happen to us if we don't comply? So, of course, there's a lot of maneuvering going on. But the interesting thing about Brazil, and this is where the whole issue of tariffs is incredibly maverick, is that you've got a country of Brazil which actually exports less to the United States than the US exports to Brazil. So if Brazil closed the door, the US could be in trouble. And what they do export to the US are things like coffee. Well, if they cut coffee off a substantial amount of imports into the US, you can imagine that the rank and file going to work on Monday morning is going to be pretty upset. So the whole thing seems very inconsistent, very badly thought out. And I think the law of unintended consequences is going to hit this administration really very hard.
Richard, the question is, when does the other shoe drop? Because seemingly, over the course of the last several months, and very good morning to you, first of all, but over the last few months, you've seen that the data hasn't really showcased the impact of those tariffs. And perhaps to a certain extent it has, when you talk about the GDP numbers that were impacted because a lot of product was pushed into the US ahead of the imposition of those tariffs. So one would assume that there will be a significant lag for some of these prices to reflect. And so when does the other shoe drop and what happens to the rest of us?
Well, of course, this has been the big conundrum for economists, is that tariffs obviously increase prices, increase inflation, slow economies down. And this hasn't really happened. It's kind of maybe starting to happen, but, you know, it's difficult to look month on month. So it hasn't really happened. So, you know, on the one hand, you might say, well, is Trump right? But on the other hand, we've got the whole Trump taco effect, which is Trump always chickens out. And there has been relatively minimal tariff impositions. Yes, we have seen some, and we have seen quite a lot of money come into the US Treasury coffers, but nothing like what was predicted. So the impacts at the moment are relatively small, and I think that's been reflected in the equity markets. However, in the bond markets, we've seen quite a lot of turbulence. And in the US dollar, of course, we've seen even more turbulence because there's been a big impact on the US dollar. It's fallen pretty well, 10%. Yes, the administration will point to falling of the dollar and say, that's exactly what we want. But it may what we want. It's really how it's come about is the issue. So I think at the moment, the stress is being taken in the bond market, US bond market, and the US currency, but not quite in the stock market just yet.
In that context, Richard, how are you trading, or not rather, how are you planning your investments? How do you structure equity portfolios, particularly when you're talking about emerging markets?
Well, I think in general terms, I've raised some cash. I've spread the load, if you like, and bought more Europe. European defense, of course, is important. I've also bought pharmaceuticals because they tend to be defensive stocks. So not necessarily completely out of equities, but certainly raised more cash, certainly spread the load a little bit. China, of course, has been quite weak, and China is perhaps one stock market that will be a diversifier to the rest of the world. Of course, if the US market falls sharply, we're likely to see sharp falls elsewhere. And that probably includes the emerging markets as well. But at the moment, I think we're probably looking at this August the 1st deadline as to whether Trump is going to taco out that August the 1st deadline. Is he just going to let it go by and say, okay, well, we'll extend it further, or is it going to be a hard deadline? If it's a hard deadline, that's bad for the markets. If it's a good deadline, i.e. he relaxes it, then I think the markets will probably try to carry on as they are. But at the moment, we're coming to that deadline again, just as we do with January the 9th. We don't really know what's going to happen. At the moment, Trump has chickened out.
You said it. Thanks so much, Richard, for joining us this morning, and always a pleasure speaking with you.